The Turkish insurance sector, like the country's economy, has taken off in recent years due to favourable demographics, urbanisation and an expanding middle class. Here to speak about if this growth is set to stay is Yilmaz Yildiz from Zurich Insurance Turkey. Yilmaz, Turkey has been one of the world's fastest growing economies. Is this still the case, and how does this translate in the insurance sector?
It was one of the fastest after China in India. 8-9% growth rates we're talking about. But with the new normals, which you see that, okay, America is doing pretty well, but Europe, slow down, no growth. China, what they call the new normal is around 7% growth. So overall, there's a shift in paradigm in terms of slower growth than what we've seen before. So that also impacts Turkey. On one side, you have the Fed tapering, which is expected to increase the interest rates, and the slowdown in the global economy is impacting Turkish economy as well. So our new normal is 3 to 4% in the next few years. The non-life insurance sector is very much impacted by what happens in the general economy. So when Turkish economy was growing 8-9%, non-life market was growing between 15 to 20%. Now with 3 to 4% growth, the growth rate in the non-life is expected to be between 10 to 15%. Still relatively slower than before, but materially higher than Europe and most of the emerging markets.
Well, which insurance sectors are the most developed? What sort of coverage does the country have, and what do you focus on?
So if you look at non-life, we're talking about a $10 billion market, which is growing 10 to 15% per annum. Now, half of the market is auto, and then the second biggest segment is property, health, followed by marine, construction, liability, and the others. If you look at the auto ownership in Turkey, and if you compare that to Europe, it's 1/3 to 1/4. And with Turkish economy's growth and increasing GDP per capita, the auto ownership is expected to increase. Add on top of that the casco penetration rates, which is hovering around 30%. You have the overall market growth, plus penetration being just 30%, huge upside potential. So the casco is one of the main lines that is expected to grow in the future years. The second was liability. Overall liability is growing, and it's expected to grow substantially as well. Health, similarly, the third line. And on the commercial property, marine, construction, all these are very much linked to the investment climate. And as Turkish economy grows, those will grow as well. And lately, environmental risks and surety products are demanded, and so in fact we will be one of the first as Zurich to provide those to the companies.
Well, the Turkish government has implemented a number of policies to encourage insurance, such as a 25% state contribution to private pension plans. What impact has this had?
The private pension system started towards the end of 2003, and you have the state's mandatory social security system, and this is a complementary and voluntary system on top of the state's social security system. And from 2003 until 2014, we have 5 million citizens voluntarily entering the private pension system, and the funds under management has become about $15 billion. And the average growth rate is 30% per annum. Turkish government is trying to increase the savings rate. And one of the best ways to increase your long-term savings rate is to convince the citizens that they should be part of this private pension system and save for the long term.
So what funds do you invest in, and how do you manage risk?
Financial income is a vital part of insurance companies, and usually you make more money from financial income than from technical income because of the nature of the insurance business, because you collect the premiums, but the claims come later on. We have a very well managed and very well governed asset management policy, basically with our colleagues at headquarters, and we have special committees that we determine the strategic asset allocation, and for each country that changes. In Turkey, depending on the Turkish economy and investment climate, plus Zurich Group's approach to asset management and the strategic allocation, we determine what the strategic asset allocation should be, and then we invest.
Well, Turkey is a close neighbour to a number of politically unstable countries in the Middle East. What impact has this had on the insurance sector, and what challenges does it pose?
What is happening in Syria and Iraq is very unfortunate. It's a human tragedy on one side, and on the other side it's having major impact on trade as well. Iraq is in the top 3, top 4 of the trading partners for Turkey. Syria was a major trading partner before these unfortunate events happened. As such, with these events, especially the trade with Syria has diminished substantially. With Iraq, it's going. Turkey imports oil and exports all types of consumer goods and infrastructure, capital goods. In terms of insurance, that geography insurance penetration-wise is lower penetrated compared to the other parts, but certain products such as marine and auto, they're impacted negatively because of the higher loss ratios and what happened there. So yes, you do have damage due to uprisings and some other events, but the impact so far has been marginal.
Well, many of the insurance companies in Turkey are foreign-owned or partnered. So does this mean that Turkey is a good place to invest for companies looking for new growth markets?
The past 10 years, more than $100 billion were invested across the sectors, but roughly 1/3 has been in financial sector, and within that, insurance took a big share. And we see interest continuing, actually. There are new entrants, there are mergers that are going on and acquisitions. And if you go forward, there will be certain consolidation in the market, and M&A activity will continue.
Well, finally, how do you stay ahead of the competition?
But going forward, we have to continue our growth. We're growing more, 40 to 50% faster than the market. We are one of the most profitable, if not the most profitable, non-life insurance company, and our multi-product, multi-channel strategy will continue, and we will make sure that we are the best judged by our customers, our employees, and of course our shareholders and stakeholders.
Yilmaz, thank you.
Thank you.